We all want to find the hot stock early. Well, after 30 years of trading, I keep coming back to this one indicator that works so well at finding hot stocks. I'm going to show you what that is. Plus, I'm going to analyze the markets. I think we could see some weakness next week, and everyone should understand why. Plus, I'll show you the hot sector that's leading the market despite weakness in the broader market. And then finally, we're going to look at the day trade of the week. I'm going to apply that hot indicator to a day trade on AWIN. That's all coming up in this week's Stockscores Market Minutes. Well, whether you're a day trader, a swing trader, a position trader, even a long-term investor, we're all searching for that magic formula that will help us find the hottest stocks. Now, I've been trading for about 30 years, and I developed something a long time ago that just works so well at finding hot stocks. In fact, I would say that it finds 90–95% of the hottest stocks. And if you apply it correctly, you can avoid the bad ones and focus in on the good ones. Now, you're probably saying that sounds too good to be true. Well, in a moment, I'm going to show you 5 of the hottest stocks from last week. And these are swing trades, stocks that went up over a few days, and how this indicator worked to find those stocks early. Now let's explain why it works first. You see, the key thing to finding hot stocks is to find abnormal activity in the market. So you've got stocks, they all trade kind of the way they always do. But using statistical analysis in a computer, we can find stocks that are trading with abnormal volume and abnormal price action based on how they normally trade. So if a stock normally moves up 1%, down 1%, a large cap stock that doesn't tend to move a lot, and then one day it moves up 5% and it trades 3 times its normal volume, that would be statistically significant abnormal activity. Now, you can apply that to a daily time frame. You can look at that on a 1-minute time frame. So what I did is I created an indicator that measures the statistical significance of price moves and volume. I call it the action candle. I don't know if that's a great name. Maybe you guys have a better name for it. If so, leave a good name in the comments. Maybe I'll change the name one of these days. But the idea behind the action candle is that it's looking at the last 30, 100 candles, however I set the indicator up, and it's going to look for those price moves and the volume that is abnormal. Now, by the way, when I say candle, I mean the bar, the bar that we're analyzing. So if you're looking at a daily chart, it would be each day as a bar or a candle when I'm looking at candlestick charts. I'll show you this in just a moment on the chart. Okay, so we're looking for these candles that make an abnormal price gain with abnormal volume. When that happens, it fires my action candle, and it will put a little dot on my chart. Now I use TradeStation, but on our Stockscores charts, we can also scan for this on the daily time frame. What I'm going to show you is the 13-minute time frame where it looks for these action candles. So let's jump in and take a look at it. This was the biggest gainer in the market on Friday. Now it's a real penny stock. I know that it's not for everyone, but this indicator works no matter what kind of stock. It can apply to Apple. It can apply to a penny stock like this. So what you should notice is that there are some yellow dots on this chart. I can circle them right there. There's some. All right, those represent abnormal price movement for that 13-minute interval and abnormal volume. So you can see that, for example, on this bar right here, it made a much bigger price gain than you would normally see. These are the normal heights of the candles, and that's obviously very tall. So that shows us that over that 13-minute time frame, it made a big price jump in percentage terms. And also you can see that it's trading much greater volume than normal. Now what I want you to notice is that when we get our first action candle of the day there, which was about an hour into the trading day, that set up for a price move that was quite significant. It went from 10 cents to nearly 25 cents in just a single day. And this stock may be one that continues to move up next week. I'll continue to watch this one because they don't usually last just one day. Sometimes they'll go for 2, 3, With the case of CGC, it went up for 10 days in a row. All right, let's take a look at another one. This is ACB. The cannabis sector has been hot lately. And you can see the big move up there over the course of a day and a half. But look at how it started. Action candle right there. So let me tell you something that's really important with this indicator. Almost all hot stocks start their uptrend with an action candle. However, not all action candles are worth buying. The ones that we want to buy are the ones that surprise the market with strength, breaking through a line of resistance. So if you know anything about chart analysis, you'll know that there are lines of resistance. And so if you've got this ceiling price, if you will, on this stock, we've got that ceiling price there. Then we got this ceiling price and we break through. That's the candle we want to buy. We don't want to buy the one that comes later, that's too late. Or even up here, that's too late. We want to buy the breakthrough resistance. Here's another one. There's an action candle there, breaking this line of resistance, and I've programmed the computer to draw that, and it went up significantly. I'll tell you about how you can use this indicator yourself in a little bit, but for now, let's just go through some examples. All right, so next one, WE. Okay, let's look for the action candles. Well, there's a couple here. But notice that they're below this line, so they don't count. There's one here, and it is breaking through this line, so that's good. There's one here that's breaking through this line. That's good. And there's one here, but it's a little late because it actually broke the line earlier, and that was only a pink dot. The difference between a pink dot and a yellow dot is that the yellow dots have abnormal price and abnormal volume, and my pink dot, which I call a message candle, has only got abnormal price movement. All right, so abnormal price plus abnormal volume, breaking through resistance, surprising the market with strength. That's the key thing that we look for. It doesn't work every time. I don't want anyone to think that it does, but almost every hot stock will show this. And I'll continue to show you a couple more from the last week. Here's another one that we traded on Active Live on Stockscores last week. Mullen, here, break. Didn't do anything the whole day. The next day, another break. Through this line of resistance. Also didn't do much for the whole day, but it didn't go down either. And then on Thursday, there's the action candle, breaking this line, and that started the move. So really it started back here, but it really got going 3 days later. And that's the key thing to understand, is that as much as we'd like them to go right away, sometimes it takes a few days. You got to be patient. Sometimes, again, they don't work. They come right back below support, in which case you take the loss and move on. That's trading. But what's nice about this indicator is that it fires on the hot stocks, the stocks that are attracting a crowd. And if you catch them on the first break through their resistance level, they often go up quite nicely. All right, I think we have one more example. This is AVTX. Here you can see it's boring. Nobody cares. There's a line of resistance here. And then it broke with a yellow dot on Tuesday morning. You can see the volume coming in. The crowd is gathering. All right, now for that day, it pulled back and finished the day actually down a little bit. But our support is down here, so we wouldn't be stopped out on the trade yet. And then look what happened over the next 2.5 days. It continued higher. That's a move from 15 cents to 30 cents, almost a double in 2 days. All right, so that's the action candle indicator. Now you're probably asking, well, how do I get this? I'll be doing some webinars next month. If you go to the Stockscores website and you go to the upcoming events page, there's some free webinars there and it'll be live. You can ask me questions in real time and I'll show you the indicators and I'll tell you about how you can use them. For now, know that just about every week when I do the trade of the week in this video, and I've got the trade of the week coming up in a moment at the end of the video, it's almost always revolving around this indicator because it really is the most powerful that I've ever tried. Forget about MACD, stochastics, all these common things. If you want to beat the market, you need an edge. You have to have something that most people don't use. That's why I wrote my own indicator and it works so well. And again, I'll elaborate on that with the trade of the week at the end of the video. All right, now I want to jump into the Stockscores website and just take a look at the charts for this week's market analysis because there's an important little breakdown here. You see it on the S&P 500. So this is the S&P 500 going back the month. And what stands out to me on Friday is that we had this breakdown. So we had a gap down on Friday and we moved lower all day long. And in doing so, it broke this upward trend line. Now, I could draw the upward trend line like that, or I could draw it like that, depending on which points you use. This reflects those 2 points, but the first one that I drew reflects all of these points. And I think that's the better one to use. And so I'm a little bit concerned that we're going to see some more weakness next week. Let's take a look at the 3-year weekly chart on the S&P. And you can see it's still healthy. You know, we're still in the upward trend. We've had a little bit of weakness the last month and a half. But if we were to actually break through this weekly upward trend line, then I'd be really worried about a major pullback, a crash. I think for now that's not a big concern. I'm only thinking next week, decent chance we're going to see some weakness. For short-term traders, that's the time frame you're concerned about. If you're a longer-term investor, I don't think it's time to run away yet. But let's look at some more charts. How about the NASDAQ, QQQ? All right, see that again. Here is the upward trend line, and we broke it on the NASDAQ as well. What about the long-term chart on the NASDAQ? Much like the S&P, it's still hanging in there. We're still in the upward trend, but if we were to break down through this from this falling top, that would indicate to me more chance of a pullback. So watch that closely. Again, I don't want to say the sky is falling just yet, because it isn't, but there's some areas for concern. Small caps in the US underperforming the large caps. You know that if you've been here every week, and make sure you're subscribed to the channel, because I do this analysis every week and I will always show you how all of this works. So on the small cap stocks, again, we had that weakness on Friday, but we're still holding this support zone. Okay, so that's our support. But notice that it's falling tops into that support. So if we were to break down through that floor at about 182, 181.50 on the IWM ETF, then I think we could see some weakness there as well. Looking at the 3-year weekly, not too bad. We've got this little upward trend line here. We're sort of hanging in above it. But again, watch for a break of that support. Just telling you things to be wary of. And again, I'll do this analysis for you each week. As long as you're subscribed, you hit those notification bells, you'll get the alert when I upload the latest video. Now, here's an interesting market to look at, the Canadian market, which has really lagged the US market. Not the past couple of weeks, however. You see the moves higher on the Canadian market. Why? I'm going to show you in a moment. Let's look at the 3-year weekly chart of the Canadian market. Still stuck in this trading range. So although it's had some strength the last couple of weeks, we haven't really been able to break out of this range yet, but it's looking good. The bottoms are rising. So why is this market starting to do well? Well, it all is because of the oil market. Look at oil. This is the hot sector in the market right now. I want everyone to take a good look at energy stocks because they are gathering momentum as the commodity is in an upward trend. There's lots of stocks that have really lagged, and it's a good place to be looking for opportunity. 3-year weekly chart of oil. We talked about this in recent weeks. I put my bullish rating on it 3 or 4 weeks ago as we broke out here. And I think likely to move higher, oil probably getting up into this zone on the USO chart. Gold had a little bit of strength on Friday, but in the context of the chart, yeah, it broke this little downward trend line. That's good, but there's still lots of resistance. So it looks better than it did last week, but I wouldn't call it a great looking market just yet. It's still in this pullback, and until we can break through that pullback line from a rising bottom, I think you still want to be fairly cautious with gold. All right, US dollar. Whoops. UUP is the symbol. If I could type, that would be wonderful. Here it is, UUP. Look at the upward trend in the US dollar. That's because of strong interest rates in the US, people wanting to put money to safety in the US bond market. Also shows you a little bit of concern about stocks. The fact that the money is going into safe havens like the US dollar, maybe a telltale sign of some weakness that might be coming in the traditionally weak month of the year, which is September. It's an upward trend. Looking at the 3-year weekly chart, you can see, much like the oil chart, it is broken through resistance. It's moving higher. How about Bitcoin? I know lots of you like the crypto. Relatively dead chart. You see that it's more or less sideways all month. It's got rising bottoms, so that's a positive, but it's got this resistance over here. So I think the upside is relatively limited. 3-year weekly chart, you can see it's generally drifting higher, but not in an excited fashion. Now, if on the weekly chart, we could break above 20 on GBTC, and whatever that is, probably around $20,000, $25,000 on Bitcoin. I really don't know what the correlation is with the GBTC price and Bitcoin's price, but if we can break through that ceiling, I think we could actually see Bitcoin continue to recover, but with a little bit more enthusiasm. Now, the bond market is pretty important, obviously, these days, as interest rate concerns are there. This chart shows us what interest rates are doing. It's the inverse of US Treasuries. And the fact that it's moving up here tells us that interest rates are rising in the bond market, and therefore it's getting more expensive to borrow money. Small cap companies in particular get hurt by this, and that's why you're seeing the small cap stocks lag the large caps. But it is seasonality time for weakness, and that's why I think we're seeing some pullback in those large cap tech stocks like Apple and Microsoft and Netflix. They're starting to show a little bit of weakness, perhaps some profit taking happening there. And so again, we want to watch that coming in the near term. All right, so my ratings then, bearish on all three markets, large cap, NASDAQ, and US small cap. So the US markets, I've put a bearish rating in the short term. I'm a little concerned in the short term. The long term, I'm still neutral. I don't think we've broken any trend lines yet. Canadian stocks, bullish in the short term and neutral long term. Gold, short term neutral, which is an upgrade from last week, but still bearish long term. Oil and the US dollar, bullish on both time frames. Bitcoin, short term neutral, long term bullish. And interest rates, short term neutral and long term bullish. All right, so now we're going to take that indicator that we talked about at the top, the action candle indicator, or as I said, give me a better name. I'm going to look at the comments and see what comes up. Maybe we can come up with something better. We're going to look at the day trade of the week this time, and it's on AWIN, another real penny stock. And I don't normally trade these kinds of stocks, but because the market was quite weak last week, these are the stocks that were able to shine because they're not that correlated to the overall market. And this particular one, very actively traded. So even though it's a penny stock, it trades quite smoothly, and you can certainly make big percentage gains on it. All right, so let's focus in on the action candles that told us when to buy this. And you should know now, if you were listening at the top of the video, we want action candles that are breaking a resistance line. And so right there is the action candle breaking that resistance line, and in the course of about an hour, made a big jump from 20 to 32 cents roughly. And that's the kind of percentage gains that we all love to enjoy. Well, if you want to learn more about these things, again, I've got some webinars, live webinars coming up next month in October, where I will explain this stuff in more detail. I'll show you my process. I'll show you my tools for finding these things, whether you're an investor, a swing trader, a day trader. It's all going to be covered. Each event's about an hour long. It's live, so you can ask me questions, and they're free. That's the best part. So make sure you go to the Stockscores website, and you can enroll in the upcoming events under Trader Training. I hope that you've enjoyed this week's video. Please click the like button if you have. It helps more people get the video in front of them. And most importantly, as always, trade well.